the acquisition of Adara that they did a couple of months back. But South Indian cement companies like IndiaCements and Ramco are under pressure on the back of a weak set of Q1 numbers. Nigel, what have you sussed out from these numbers in terms of trends?
Well, both the numbers were disappointing, but for Ramco Cements, they trade at higher valuation, so that stock as well is getting a bit of a knock. While for IndiaCements, well, it trades at around $75 per ton. Let's start off with Ramco Cements first. Now, on the top line itself, there's a miss of close to around 100 crores. The EBITDA number as well has missed by close to around 60 crores, and the profitability as well has come in much lower. What was the reason of the miss on the top line? First, some part of the street was working with a number of around 4.4 to some, even Kota was expecting 4.5 million tons. They've delivered 4.3 million tons. So that's a little lower than what the street was working with. The other factors, realizations on a sequential basis are down by close to 4.5 to 5%, while the street was working with a contraction of 2 to around 3%. So that explains why the top line has seen a bit of a miss, and that's why the EBITDA per ton as well has come in sub 800 rupees per ton. Moving to the power and fuel cost, when on a per ton basis, that's up by close to 8% sequentially. On a year-on-year basis, it's up by close to 12%. The management says that they were sitting on some high cost of inventory, and that explains why, if you look at the blended cost of fuel, that's at around $170 per ton, and now you have coal as well as petcoke prices that are much lower. The benefit of that will flow in the coming quarters. Point number 3 is the finance cost. Well, that's gone up as well. Now, we know that they're doing some capex, so the debt numbers are around 4,400 crores. But the cost of borrowing as well has gone up. So put all these factors together explains why Ramco Cements, the numbers were disappointing, and the stock trades at around $130 to $140 per ton. So the room for error is a little lower. For IndiaCements, expectations were low, and they've delivered a little lower than what the street was working with. So top line, there was a bit of a miss of around 60 crores. The margins came in only at around 0.5%. The street wanted a number of close to around 1%. Let's run you through a couple of aspects. Other expenditure was up by close to around 4%, and also employee cost was a little bit higher. Now, the numbers are disappointing, but what supports the stock is the management commentary. Now, after a while, you're getting positive management commentary. They're talking about steps to modernize the plants, and that's why it improves the operational efficiency. They're also talking about infusing some kind of money from the sale of non-core assets. And as I said earlier, it trades at an EV per ton of around $75 per ton. So at the lower end of the spectrum, but these numbers go down as disappointing, and both of them have disappointed quite a bit. Deepak Shenoy, founder of Capital